And what I'm simply saying to you is that these countries now will have a massive desire and incentive to accumulate gold, which will allow them to create the settlement token held within their own borders instead of the Bank of England and the New York Fed, which are massively rehypothecated and corrupt, which blur the real value of gold. And all of these countries who have been supporting our exorbitant lifestyle, the good graces of our foreign creditors, are now selling treasuries because they can be stolen from you and replacing it with gold, which has doubled the performance of the treasury, has no counterparty risk, and will be the backbone of a new system that is then traded over Enbridge, which Saudi Arabia is a full participant in, that is not compatible to U.S. dollars. And it's also important, I think, to understand that, this is a game whereby these settlement tokens, if you will, which again are held in escrow and can be deliverable, will at first only be for the governments and will only be valued upon really the gold within it. But they envision a time where the supply-demand fundamentals for the unit token take over. And so the incentive to hold treasuries is gone. And when you talk about the incentive to hold gold, it's increasing by the day and removing counterparty risk. One last key point about the Enbridge and the unit infrastructure is that everyone's talking about, a BRICS common currency. That's not what this is. Every single country, and they make mention of this, every single country will be able to maintain their own monetary autonomy. They'll have their own economies within their own borders instead of being reliant upon a third party like the United States dollar. They will all be able to have their own monetary autonomy and authority, and they're going to keep their house in order and peg their currency to gold, so it will be part of the BRICS settlement currency, the unit. They can trade with one another over Enbridge using their central bank digital currencies, but if they need to settle for energy, they have the token, the unit token, deliverable in gold, held within their own borders. All of this is a fuse, if you will, that was just lit under the dollar. And there will come a point what starts out little by little by little by little as these countries accumulate gold, sell treasuries, not too fast to cut off their nose to spite their face, but fast enough because we're getting late in the hour, whereby, it's a very scary, a very, very scary prognosis for the Western system and for the dollar and for the treasury market. And these countries, first it was 5, now it's 10, 59 said they want to join. You're talking the majority of human population, military might, GDP, commodities. You talk about this green agenda, by the way, real quick, and then I'll stop and answer any questions you have on this or move on. There was just a report that came out by JP Morgan saying that last year in 23, China and the Eurasian continent were responsible for producing and mining 80% of the rare earth, but China was responsible for refining 100% of the rare earths. What they are doing is building a system on commodities, as Zoltan Pozar said over and over and over and over again, instead of the debt, the opaque debt instruments of a broken, insolvent, and hypocritical and sanction-happy country. This is real. And the fact that the public doesn't know this or the media doesn't talk about it is pathetic as far as I'm concerned. So yeah, it's just getting started, Jesse. And it's
Andy Schectman argued that a significant, yet underreported, shift in global financial dynamics is occurring as countries accumulate gold and move away from US treasuries and the dollar. He contends that reported trading volumes of precious metals are understated, obscuring market manipulation and draining global exchanges like the LBMA, COMEX, and the Shanghai Metals Exchange. Schectman believes these countries are preparing for a new financial system built on commodities, particularly gold, as a stable asset compared to the opaque debt instruments of the current US-dominated system. He highlights the establishment of new settlement infrastructures, such as the Enbridge system and unit tokens, which allow nations to maintain monetary autonomy and peg their gibber to gold. This movement away from treasuries and towards gold is seen as a safer asset without counterparty risk. Schectman also notes the growing dominance of China and the Eurasian continent in rare earth production and refinement. viewing it as part of a broader strategy to base economic power on tangible commodities rather than debt. He expresses concern over the lack of public and media awareness of these developments, warning that this transition could lead to a major reconfiguration of the global economic landscape with profound implications for the existing order.
Go back to the Great Depression, Homestake Mining was the number one performing stock in the entire, when during the market collapse. It was the number one performing stock in the entire stock market when everything collapsed. I agree with Alistair on most everything he ever says. The only thing is that I would not put an overwhelming amount of faith in the mining companies doing that, because things could get very ugly very fast. Maybe a guy like Keith Neumeyer might actually do something like that, as he's one of the only businessmen running a mining company in what is predominantly being run by geologists who don't see things as clearly as a guy like Keith does. Yeah, I think there's certainly value in mining shares. And if I had to guess where we are heading, look, we have almost $200 trillion in debt. Medicare Part B, 99 trillion underfunded. Part D, the prescriptions, 22 trillion underfunded. Social Security, 77. Government military pensions. We're creating 1 trillion in debt every 100 days. That's 100,000 every second. 1, 2, 3, 4, 5. That's how fast we're accumulating debt. Inflation is going nowhere. Inflation is only going to get worse and worse and worse and worse and worse, especially as countries around the world start divesting more and more and more of dollars and treasuries. I could see the stock market going ballistic. I could. But in terms of, and I could see gold going ballistic. I think it will bring on how do you even say it? It would bring on a mega trend in commodities. And I think the stock market will probably go higher in that environment, maybe a lot higher, but lower in terms of ounces of gold. And so I think that when you talk about it going higher and higher and higher, what's it really worth? You need to have a barometer to measure it against. If measuring it in dollars, sure, it could go way higher, but measuring it in ounces of gold, I believe it will go way lower. And so I think that's the only thing that I would push back against, is that most of these mining companies are hand to mouth. They don't have the financing or the bankroll to disintermediate and go directly to the public like that. Most of them are reliant upon the bullion banks to give them the money, because they spent all their money digging it out and financing it and all the costs associated with mining. So maybe over time, but yeah, history shows that Homestake Mining, when everything else collapsed, was number one. It would be better than owning other stocks, perhaps. But I do think that I would not say it's out of the realm of possibility that the stock market rip roars, but measuring it in an inflationary, massive inflationary environment, but measuring it in ounces of gold, I think it will end up being less and less and less in terms of its ounces of gold.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comment section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.
Andy Schectman offers a critical analysis of the current global landscape, emphasizing a significant shift towards gold and away from the US dollar. He points out that gold has reached new all-time highs, primarily due to a surge in central bank purchases and escalating geopolitical tensions. This trend indicates a growing freedom of gold as a stable and reliable asset amidst uncertain times. A notable development highlighted by Schectman is the repatriation of gold reserves by countries such as India, Saudi Arabia, Germany, Austria, and Turkey from the Bank of England and the New York Fed. This move reflects a growing mistrust in foreign-held reserves and a desire for greater control over national assets. Schectman interprets this as a signal of nations distancing themselves from the US dollar, with the BRICS nations even exploring a new settlement currency partially backed by gold. In addition to gold, Schectman draws attention to silver, noting its dual role as an industrial and monetary metal. He suggests that silver could follow gold's upward trajectory as economic and geopolitical uncertainties continue to loom. Schectman also provides a historical perspective, referencing the performance of homestake mining during the Great Depression. The growing global debt and inflation further compound concerns about market stability and highlight the potential for a shift towards tangible assets like gold. Looking ahead, Schectman predicts a megatrend in commodities and a possible surge in the stock market in nominal terms. However, he cautions that these gains may be illusory when measured against the intrinsic value of gold. Overall, Schectman's insights underscore a broader narrative of shifting global financial dynamics, where gold and other commodities are increasingly seen as safe havens amidst a landscape of economic and geopolitical uncertainty.